Today I'm going to be sharing what I call the real estate roadmap, which is a property training, and the purpose of this training is to summarize the 5 key steps that I used to scale my own property portfolio to multiple 8 figures. And these steps, when done correctly, and if you take action on them, the big thing here, the key aspect of all this is actually taking action. A lot of the time people, they learn the theory, but they don't apply the theory. And that's a key thing. So, you know, people will go out and they'll read books, they'll listen to podcasts, they'll watch videos, and they'll buy courses and programs and things like that. But it all remains up in the brain. And it's only when you actually take action that this stuff becomes skill. So, you know, theory is one thing, skill is what you get when you've actually taken action on the theory. So anyway, those of you who take action, a lot of the time, the reason that you don't take action is because the comfort zone. And one of the things that I've found over the years is that I'll take action where I feel comfortable, but I will procrastinate and I won't take action where I don't feel quite so comfortable. What you will probably find, and if you do a self-examination, you might discover this about yourself, is that I'll often see that, you know, somebody, they're very comfortable, say a tradesperson, they're very comfortable going into a house and doing refurbishment work, like taking down walls and replacing bathrooms and kitchens and things like that. That is within their comfort zone because they're familiar with it. They do this on a regular basis. But ask that very same person to stand up on a stage and to do a presentation, and they'll go white with fear at the idea. My God, I can't believe I couldn't stand the idea of doing that. And so they'll never step out into that part, and because that is outside of the comfort zone. And this is something that can hold a lot of us back. We'll do what we like, the bit that we like, but we won't do all of the stuff that's required. And so if there's anything I would suggest, I'd say just try to push yourself out of your comfort zone if you want to actually take action on these things. If I tell you, for example, that you need to build your profile online and you need to start networking, you need to start going to events and networking with people, that perhaps is an area that you don't feel quite so comfortable. And so that's the bit that you'll delay. So you might go out and buy a property, or you're ready to buy a property, but you wonder why your career is not progressing to the next level. And often it's because you're not willing to take that little bit of comfort that requires you to step out of your comfort zone. Anyway, as an encouragement tool and something to kind of maybe motivate you a little bit, I've included in this training, I've included a PDF for you to download, print off, and then maybe use to take notes as we're going through this. And it should help to map out the next steps that you should take. So have a look for the PDF below and print it off if you can get a chance. And we'll go through this training and you can fill it out as you're going. Now, the aim of the training is to provide the steps needed to help you move from, we'll say, worker to owner or investor. Okay, so a worker is a person, and it can be anybody, regardless of whether you're a professional or whatever. If you're a worker, you're a person who trades your time for money. You're paid for your time. Whereas when you're an owner or when you're an investor, what that means is that you spend your time creating wealth. You spend your time acquiring assets that produce passive income. You don't actually need to put your time into generating income when you own these assets. And so that is an important aspect. And a lot of people, they love the idea of creating wealth. But then when it comes to the next stage, they're confused about how to actually go about that. Or, they fail to take the action that's needed. So let's get into it. Let's start with a very brief outline of what we're going to cover today in this training. I'm going to talk a little bit about myself. I know a lot of you may be familiar with me and my content and stuff like that, but for those of you who are not, I'm going to talk about my roller coaster ride, and some of you will know what that means. I'm going to tell you why I believe you should build a property portfolio. Then I'm going to talk about how to actually go about building a property portfolio. And then I'm going to give you a brief overview of my Accelerator program, and I'm going to talk about some of the clients that I've worked with. And then I'm going to give you a couple of final steps that I think if you take them, you'll start to see some sort of progress in the direction that you want to go. All right, so Who is Gavin Gallagher? I know a lot of you listening or a lot of you watching are familiar with me, and you've come across my content online. Maybe you've been following for a couple of years, so you know these stories that I'm going to tell. And whether it's social media, podcast, whatever it might be. But for those of you who don't know much or anything about me, I have been an investor and a developer of property now for this year marks I've passed 30 years. I'm now into my 31st year since I started investing. I'm 52 years of age, so do the maths, work backwards. I bought my first property in May 1993, and that was the very same year that my father died. And so my dad died very young. He was just 45 years of age, and I was 21 at the time. Now, when it happened, I didn't think my dad was very young. It's funny how, because I was 21 at the time, I'm thinking 45, that's a good few years away. But now I am 7 years older than my dad was. I realized, geez, that was young. And anyone who has experienced the death of a parent or, you'll know that apart from how sad it is, an awful moment in your life, but it's also a very, very disruptive and scary moment. And so I was studying architecture at the time. I was going to become an architect, and I was in third year of DIT Bolton Street. And all of a sudden, my dad's dead, and now I'm thrown in the deep end. I'm dealing with banks. We're trying to sell assets, myself and my mum. And the reason we're trying to sell assets is because we needed to shore up the family finances. And that was really, really tough, especially on my mum. Because my sister, my brother and my sister are younger than me. My sister at the time was only 13 years of age, still in school. And so, paying the bills, keeping the wolf from the door, my mum didn't work. So suddenly, you're selling off assets in order to just bring in the money to pay for the bills and stuff. And dad had always handled all that, So I had to get involved in what my dad had been involved in. He was involved in a family business. He also had some other projects he was working on, various bits and pieces and stuff. And to be brutally honest, I was absolutely clueless. And I don't exaggerate a bit there. I mean, I just didn't have a clue what I was doing. And being thrown in the deep end, there are pros and cons. Some of the pros, I'll start with the pros, you are forced to take action. You have no choice. And as the old saying goes, necessity is the mother of invention. Had I not been forced to take action, I honestly probably would have sat back in my comfort zone and done nothing for quite a few more years. Now, the cons, the biggest con of all was just the amount of mistakes that I made. I was literally starting from page 1 of the manual, How to Do Business. And I did not have a mentor. My dad was my mentor, and he had just died. So nobody there to ask for advice, nobody to offer some guidance, a friendly steer, nobody. And when I think about that now today, it occurs to me that this is probably the prime driver behind me becoming a coach and a mentor myself. Because I distinctly remember the feeling of uncertainty. What should I do next? What is the next step? I literally being kind of like a deer sort of blinded in the headlights. That's what it felt like. And this leads to inaction and uncertainty. It's better to do nothing than to risk making a big mistake and it costing you more. But it's important also to realize that the cost of inaction is also huge as well. And so there's a big theme here so far, you'll probably have noticed, and that is around taking action. The stars are never going to align perfectly. Sometimes you just have to go and go at what you've got. And there's a great old saying about being resourceful. And usually it's not a lack of resources that's the problem. It's the lack of resourcefulness. And so how do you become more resourceful? Well, to become more resourceful, you do what you can, you use what you have, and you start with where you are. So just start now with what you have and with what you know, and obviously easier said than done. I totally take this on board. It's easier said than done. And so I'm hoping this training that I'm going to do here today will help to establish what the next steps are so that if you are uncertain, you'll have at least a few ideas, and you'll maybe walk away with a bit of a roadmap for your next steps. Now, getting back to me and my career, like my first investment property was an apartment, and I bought it, and I can remember realizing I'd made a mistake when one evening I went over to stay in the apartment just to kind of see what it's like before I put it on the market. And as I went downstairs to get something to eat, I couldn't open the door of the building. And so I'd left my apartment, gone down 2 floors, and as I was trying to push out onto the street, there was a homeless guy asleep in the doorway. And I was just like, oh, excuse me, trying to get by. And the next day I went out, and there was like the person had thrown up in the doorway. And I remember thinking to myself, crikey, this is going to be a hard place to rent. And so it wasn't until I was, a couple of years later, I was lucky enough to stumble upon a 1 acre plot of land in the west coast of Ireland in a place called Enniscrone, which is in Sligo. And this is where I realized the power of property. Now, I bought this plot of land. It was very, very sort of low price at the time. Well, at the time, I suppose it was, it was probably, maybe for me at the time, it was nearly 2 years of salary. But I had saved up and I had 25,000. So I bought this property with 25,000. And because at the time, by this stage, I was a trained architect, I had a small architectural practice. And so I was able to do the planning application myself. Now, at the very same time as I was doing all of this, I was working for my first client of the architectural firm. And it was a couple who asked me to do an extension to their home. And I can remember at the time being all excited at this, my first client, this is brilliant. And so I went and met them, and they told me their budget was £80,000. Now, this is Irish pounds. In today's money, in euros, it's probably about maybe 100 and maybe 120,000 euro. And so my fee was going to be 10% of that. So £8,000. And my salary the year before I had actually gone out on my own, my salary that year had been £16,000. And so this seemed great to me, like, wow, 8,000, like my first client is paying me 8,000, like half a year of salary. But then the demands, this was a very demanding job. It was an old house these old houses have a lot more work to them because, the walls are not straight and everything is kind of different to a new build. And so it was a really time consuming project, and it took me months of work to kind of get this project going and then try to actually manage the build when they got a builder in, and I had to kind of hold the hand of the couple and the builder trying to do the job. And halfway through that process, I was granted planning permission for my little plot of land in Enniscrone. And I can remember calling up this local auctioneer and saying, hey, listen, I've just got planning. Now I need to kind of like figure out how am I going to build this place. And so I asked the local auctioneer, could he give me an introduction to a builder so that I could chat with the builder and find out like what's it going to cost to go and build a couple of these houses and sell them and stuff. I wanted to be a developer and an architect at the same time. And so the auctioneer told me, give me a couple of days, I'll go away and check it out. And then he came back a few days later and he said, Gavin, the builder I spoke to actually would like to buy the site. And it was an unsolicited offer. I was like, I don't want to sell this thing. And they said, well, he's made me an offer. Would you like to hear it? I said, go ahead. He's offering 125 grand for me to sell the site with the planning permission. I hadn't done anything to the plot. I had bought it for 25 and I just went and applied for planning, and the increase from that planning had gone to 125. So like 100 grand profit for literally maybe 1 week of work on the application project, the process. You got to do drawings, you got to submit them, and that maybe took me a week. And so this was an epiphany. This was like the light bulb moment, like ding, oh my God, I just made 100 grand for like a week's work. And over here in the architectural side of the business, I've spent 6 months and I have another year maybe working with the builder, and I'm going to earn 8 grand from that. And so wasn't long after this, I finished working with the client, but I basically closed down my architectural practice and I went all in to property investing. And that one project changed my life. Now, I don't mean the 100 grand changed my life, but the realization that what property investment was capable of doing was just absolutely mind-blowing. Like the profit potential of certain deals is staggering. It's not unlimited, but compared to what you would do with your time, it's massively different. And so my next purchase, the next property purchase that I made, was a retail unit in Clondalkin. And this was, I mean, I've talked about this before, but I bought this property with a partner and a friend, and we bought the property for 600,000. And I think we put a certain amount of money in ourselves. Maybe we put down 60,000. So I think we put 30 grand each. So not dissimilar to the 25 grand I put down on this property in Sligo. But my partner and I, we put 30 grand each, and we borrowed the balance from the bank. And 18 months later, after going for a planning change and a few bits and pieces like that and renting it out and stuff, we sold that property for over 3 million. And so 18 months and about 2.5 million profit. And to me, this was like, it was justification, first of all, for going all into property, but it was also this second epiphany or light bulb moment when I suddenly realized I have discovered the magic formula for becoming incredibly rich. I mean, 2.5 million in 18 months. Not many industries allow you to do that kind of thing. And so I just said to myself, right, full on, rinse and repeat, do this exact same thing over and over and over and over and just keep on doing it. And so I did this for several years. And I also branched into house building and things like that, which went very well for me as well. And so from my first property ever at the age of 21 in 1993, by the time 2005 came along, 12 years, 12 short years, because time goes so fast, 12 years doesn't take that long, I had amassed this huge portfolio and I was worth millions. And what happens when you enjoy loads and loads of non-stop success for years? What happens is, or certainly what can happen, is you get cocky, you get complacent, and you get overconfident. And this is exactly what happened to me. I started going after much, much bigger deals. I started going after much riskier deals. My ego was now in the driving seat. And rather than my intellect, I was living basically a kind of a lifestyle based on ego. Very, very lavish, traveling first class everywhere, driving a nice flashy car, living in a big mansion. And all of this, like I was 30, by the time 2008 came along, I was 35, and that's when the music stopped. 35, multi-millionaire, living in a big mansion. I had a house in New York, or I had a house in Spain. I had a penthouse apartment in New York, and I had about $1 million a year in passive income coming in. And this is when the roller coaster took place or happened. The 2008 global financial crisis arrived, and it very much pulled the rug from under me. Banks stopped lending money pretty much overnight, and property values didn't immediately collapse, but nobody was buying because they couldn't raise money to buy. And so unless you had cash, like enough money to buy a property with cash, you were not able to buy property because nobody was lending at all. And as a result of that, property values fell. In some cases, 70% fall. And suddenly I go from being the lavish lifestyle, big ego guy to firefighting. Every single day, another crisis. Every day, another bank ringing me up, demanding repayment. A frantic search for investors to help me shore up this situation. I started traveling all over the world looking for investors. I remember I was in Abu Dhabi on a frequent basis. I was in Dubai on a frequent basis. I started going to Qatar, all of this stuff. And meanwhile, my family home back in Ireland, the big mansion in Ireland, that was now at risk because I had borrowed money and I'd used it as collateral. And so this was leading to tension in the family with my wife, my now ex-wife, to kind of jump ahead and spoil the story. So what was the price of my ego-driven sort of bonanza? My personal portfolio had fallen in value from its peak in 2005. I had a portfolio worth 65 million. And to a point in around about 2010. It took up a couple of years from the 2008 crash until you hit the bottom of the market. But it was, say, around 2010 or 2011. I can remember doing a net worth statement for the bank, and it told me in big red ink that I was negative 16 million. That was my net worth, minus 16 million. And I had 3 banks chasing me for 40 million of debt. They did what's known as a full cash sweep, and that's where 100% of the cash flow that I was enjoying from the property income was swept off out of my bank account. It didn't even go into my bank account. It went to them first. So they weren't releasing anything. So I went from $1 million a year passive income to 0 in the space of a couple of years. And they started selling off my assets at bargain basement prices. I can remember some of the assets, it was eye-watering. Stuff that was worth, 5 million in 2005 was sold for 1.5 million. Massive falls like that. My beautiful family home was sold on me, and the strain was extraordinary. And so naturally enough, as you can probably imagine, it wasn't very good for the family to lose the family home. And so my marriage came to an end at that point. Now, why am I sharing all of this? Like, this feels to me sometimes like a bit of an overshare, but I'm telling you this because I feel way too many people out there focus on telling all the success stories. So either they're absolutely perfect or they're not sharing the full story, because I know a property career has its ups and downs. There's good days and bad days. And so I think it's important to be fully transparent and tell the full story, warts and all. Property investing has the ability to reward you massively. It really does. But it also punishes mercilessly for foolish mistakes and errors. And so you really do need to be careful. Like in my case, I got it monumentally wrong. And I wasn't alone, by the way. Like, one of the things that I kind of think about when I look at this is that most investors and developers of property around the same time, like, they went through something very similar. Some of them were on a smaller scale. Some of them were on a much, much bigger scale. And some of the richest people in the state went bankrupt in that time. So I was not alone in what I was experiencing, but I'll tell you, that doesn't really help. When you're going through it, man, it is difficult. Every day was difficult. It was extremely stressful. But the thing that I hated the most was the humiliation. I felt such humiliation when I had to go and ask my family and my friends for help. I felt deep frustration at being unable to buy the stuff that I had taken for granted. Like, I couldn't even buy a cheap secondhand car without asking a family member to help give me the money to do it. And I couldn't cover my own rent that I had to pay. I needed to ask a family member to let me stay in their rental property rent-free for a while. So this was shameful and humiliating. And I felt a lot of shame that I could not support my family. And the biggest thing was just the fear and the uncertainty. The uncertainty was crazy. So look, leaving all that behind, let's talk about the road back, like the long road back in my case. And as many of you know, today I run East Point Business Park, and I am part of a family business that also has a house building arm. And so we are developing sites around Dublin, and we've just bought a site in Drogheda. So, we have lots of activity going on. And it's important to, acknowledge that I had that fallback. Not everyone will have that fallback. But really, I would say a lot of the reason that I was able to sort of make a comeback in any shape or form was down to resilience, like grit and resilience. And I think if you are getting into property, you really do need to accept that it is not always going to go according to plan. Like, it does not go in a linear way. Even if you look at historical charts, you'll see that there's ups and downs. Now, it usually goes up, but sometimes it'll go above the mean level, and then it'll fall back down below. And so we call it regression to the mean. And there are good days and there are bad days, as I said. Business, and particularly investing, I believe, is about 80% psychology and about 20% strategy. And so the reason I say that is just because despite the roller coaster that I endured and all of the pain and anxiety and suffering stuff, I'm still here. Like, I'm still a property investor. And why do I believe that you should build a property portfolio? Why invest in property? Well, because I recognize it is still a key component to building wealth. If you want to build or create wealth, you only have so many avenues to achieving it. You can get a really high-paying job, I guess, but for most people, a job really just covers the bills. It's not going to ever be a source of accumulating a lot of wealth. You can also go about starting a business. Like, people are natural entrepreneurs and salespeople and stuff, and they'll go out and start a business, and that can be a way to create wealth. And certainly it's a good avenue to do it if you have those skills. But it's important to acknowledge that 65 to 70% of businesses fail within the first 10 years. And the issue is also down to people just trading their time for money. And that is, tradespeople, contractors, all of those people out there that have a skill that they basically trade that skill for money. And so you're always going to be busy trying to pull in the money. But if you're not careful, you'll just be busy trading time for money, and you won't actually build those passive income assets that are essential to you becoming the owner and not the worker. Now, if you printed off the PDF that I mentioned, you could take it out now and just jot down a couple of things. Like question 1, I ask about your income targets for the next 1, 3, and 5 years. And what I want you to think about is, like, if you were to replace your salary, like 100% of your salary, what would it take to do that? What kind of level of rental income would you need, clear of debt and stuff like that, to actually achieve that? So work out what that number would be, and then think about it in a 1, 3, and 5 year scenario to see, is it possible to do that? Now, another question, do you have a pension? And if you do, are you paying into it actively? Because the reason I ask that is a pension is a great vehicle to become an investor. If you have your own company, or if you're a tradesperson and you create a pension, you can actually pay into that pension and you can create a nice little nest egg there that you can go out and buy property with. And you can even borrow money through a pension. And so that is a great way to build wealth, because you can do it in a tax-free environment. And so you can grow your assets in that pension much quicker than you will outside of the pension, where you got to pay tax and all that kind of stuff. Now, while we're mentioning pensions, it's important to note that we're talking about Ireland here, the Irish state pension. Do not think that that is going to be something to help you in your old age. The Irish state pension currently pays out €277 a week. So have a think about how far would that go in your weekly expenses. That's about 14 grand a year. And, is this how you want to spend your final years of life? Scrimping and saving and constantly worried about whether or not the money is going to stretch to the end of the week. And so I think we can all agree, I think we're probably all on the same page, like wealth creation is a crucial skill, and it must be a focus in your life. And if you're not actively working at this at the moment, then the reality is other stuff in your life, your job or whatever it is just going to get in the way. We all have these obligations, and they become more urgent in the moment, and so you push everything to the side. And the reality is wealth creation is not urgent. It is very important, but it is not urgent. No one is screaming at you to create wealth. You need to be driving that forward consistently every single day, every single week, every single month, and it's a marathon. You just keep on pushing it forward. Now, most people, they say and they acknowledge it's important, but their actions do not match their words. And so we call this cognitive dissonance. And this is where you know something to be the truth, and you would say, yes, creating wealth is very important, but are you actually doing it every day? Probably not. And the reality is most people are not where they want to be financially. And sadly, they're not actually taking the action to change their life for the future. Like if you're not taking action today, then why do you think at some point in the future your finances will be different? They're not going to be. Action is the key differentiator. So another question for you from the PDF: your current financial situation. How many properties do you currently own? Now, I'll come back to that in a moment. But what is your current monthly cash flow from those properties? And what is the total value of your portfolio today? And the reason I'm asking these questions is because once you've answered them, you're likely to fall into one of two groups. Group one is going to be, you're starting out, you're learning the ropes, you don't actually have any property yet. You're listening here or you're watching this because you want to learn how to do it. And so I'm going to have some tips and stuff for you here. But group two are the guys that already have property. And those of you who already have property that have maybe a little bit more experience, there's also stuff here for you. And so how does one go about investing in property? What are the key steps? All of the old wisdom holds true. Location, location, location. That's kind of an obvious one. Everyone knows about that. You got to make sure that you're close to public transport. You got to make sure you're in a good area. You got to, all of the stuff. I'm not going to bore you with the obvious stuff. The day you buy is the day you sell. You got to make sure that you're buying at the right kind of value and that it washes its own face. And if you're in group one, the novice group, I do have some free resources if you to help you with this, and you can join my school community. I'll put a link down below for that. But if you're in group two and you're one of the guys that have just a little bit more experience, maybe you've got a few properties, or maybe you've had in the past and then you sold them. Maybe like me, you went through the crash of 2008 and you're kind of weathering the storm and you're keen to kind of maybe step back into the arena, as we say. It all begins with strategy. It's important to understand there is no one strategy that fits all. And that's one of the first things. And also important to know that strategies evolve over time. I'm critical of coaches and people out there selling courses that are selling you a particular strategy, because you might go and say, okay, do this strategy, and that's all fine today. But as I know, the stuff that made me millions back in 2003, 2004, 2005, like that strategy doesn't really exist in the same way anymore. And so if I went out and tried to sell you that, I'd be doing you a disservice. So understand that no one strategy fits all, and no one strategy ever lasts forever. What you do to figure out your strategy is you evaluate what are your skills, like what's the low-hanging fruit, what's the easy stuff for you to be able to do, what are the resources that you have at your disposal. And an examination of these things will often help you identify the obstacles that are standing in your way. Now in the PDF, you'll find another question, and it's, what are the possible obstacles standing in your way? So number one a lot of the people will have this, is that I don't have enough capital or money. Number two, I don't have enough experience. Number three, I don't know anyone in the property sector. Like I can't get advice from anyone. And number four, I don't have enough time to do this. And maybe there's a fifth one. If you do have a fifth one, like write it down there in the box. Now, as you tick down these boxes or note down whichever one applies to you, this will actually help you in deciding the best strategy for you. And, as you find out that you have experience, you probably have some experience. You probably do know some people that can open doors and that can do certain things. And I have ways of helping you to establish this stuff with some of the programs that I do. The next step is the financials. And if you have identified an opportunity, how does it stack up financially? And do you actually know how to do an analysis of your opportunities? Like, do you have data that you can compare your property that you're looking at now with others in that area, for example? How does it compare in terms of rent? How does it compare in terms of value? And break it down, like value per square foot or per square meter. And look at the conditions of the property. Are they similar? Like if you're comparing your property as a rundown old place that needs a load of money invested, and you're comparing it with a place that's brand new, it's not the same thing. So you have to be careful to compare like with like. Now, if you don't have comparable evidence, it's very hard to know, are you getting any value at all? And so I would strongly urge you to go out and start gathering that data so that you know what's going on. The next question is it possible to add value to the stuff that you have. Now, whether that's by extending the property or refurbishing the property, or as I used to do, intensification of the use, get planning, break it up into a number of smaller units or whatever. Adding value is a critical skill. If you want to scale your portfolio and you want to add more assets to your portfolio, you're only going to be able to do that by forced appreciation. The market is never really going to move fast enough to allow you to accumulate the wealth that you want. You have to force appreciation by adding value. Your ability to add value, there's many ways to do this, and I go through all of that in my programs and stuff. But it's not just you'll run out of money before you have built a portfolio. If you're looking to do up a property, as you're doing it up, you're spending money, and so you're going to run out of capital pretty quickly. So the property business, obviously, it's a very capital intensive business, and that is one of the reasons why so many banks are involved, because you can do almost nothing with property without a bank's involvement, whether it's to buy the property or whether to add value to it. And so adding value is pretty much an essential skill. And getting money from the banks is obviously a major step towards it. But the banks, they have their limitations. There's a lot of credit committees and they have certain policies and they'll only lend you so much. And those percentages, if you're short on that percentage, you're not getting the money. And this is where private investors come in. Being able to demonstrate your ability to add value in the first place, that is a really important step in working with private investors. You'll need to be able to show them that your strategy works, and you'll need to be able to show them that you have a track record that demonstrates that your strategy works and that you've got experience in doing this. And then the final step really is, how do you communicate that you have this track record and that you have these skills? And a lot of the time that is by building a profile, and you'll build a profile using social media. You might build a profile using a website. There's a lot of different ways, but as I said earlier, a lot of the time these are outside of your comfort zone. Putting your head above the parapet, starting to share about your projects, starting to let other people know that you even are investing in property. That can be a step outside of your comfort zone. So question 4 on the PDF is, write down what could potentially attract investors. What is your investor attraction plan? Number 1, your strategy. How do you go about adding value to a property? What would be the strategy? If you were talking to an investor today and they had money to give you, what would you say to them? How am I going to add value? Number 2, your story. Your story is your backstory, your track record, your experience. So you're talking to an investor. The project is one thing, but they want to know about you. What about you? What about your past? Have you got track record? Have you done this kind of thing before? Am I lending money to someone with experience or a complete beginner who's kind of learning as they go? And then finally, your state. And this is the state of how you communicate it. Are you doing so in a confident way? Are you communicating all of these skills and stuff you have to the marketplace? And how are you going about that? You might do that through social media. You might do that through, as I do, podcasting. A lot of this stuff is a method for getting yourself out there. You see, before any investor will ever part with 1 cent or one pence of their hard-earned capital, they are going to want complete confidence in your ability. A big part of this is going to be down to how you present the opportunity. And so, do you have a pitch deck? What is your presentation style? Are you used to doing this kind of thing? These are all skills that I teach in my Accelerator program. I take my clients through 4 key modules. The modules, number 1 is the roadmap module, and that is all about establishing your strategy, as we talked about. Number 2 is the financial analysis. You've got to be able to do the numbers, not just for yourself to know is the project profitable, but also you need to be able to do the numbers in a way that can be presented to this investor that you might be meeting later on. If you're not able to demonstrate your ability that the project is actually going to make money, then it's going to be hard to convince that investor. So financial analysis is a key aspect. And then portfolio building. How do you build a portfolio? How do you identify, find properties? How do you negotiate? How do you do all of these things, like manage a job, manage a project? What are the professionals that you have to involve? All of these skills are part of building a portfolio, and you're juggling with portfolio building, because while you're buying one property, you might be managing another. You might be in the process of renting another, and you might be in the process of refurbishing another. So those are multiple skills. So you've got to become good at managing multiple skills. And the final thing that I teach in my accelerator is I teach the investor pitch, how to pitch investors, how to meet them in the first place, how to build that profile that will give them the confidence. So when you reach out to them, or even better, when they are reaching out to you asking, can they invest, that you can actually bring them through your pitch deck, and you can leave them with that confidence in your ability. Their certainty is that, yes, this person really does know what they're talking about, and if I give my money to them, they are going to actually give it back to me. We're going to make a profit on this, and it's going to be a nice way to turn a buck, as we'd say. In the last 3 years, I've had a load of different clients through my accelerator, and like it's from all range of industries, all range of locations, and all range of demographics. And like the starting with the demographics, I've had Adam and I've had Calum through the program, and both in their mid-20s and both smashing it. And it's really interesting for me to see guys in their 20s doing it, because a lot of the time I think, oh, they're probably too young, but actually not at all. Smashing it. I had Stephen and Rob through the program, and Stephen is living in Germany and investing in the UK and Ireland. Rob is actually still in the program, and he lives in Abu Dhabi and is investing back home. You've got Eddie and another Stephen, and these are busy, successful entrepreneurs with very successful businesses already. Like, they don't need money from to earn a living. They've already got wealth established, but both want to build property portfolios, and both have come on to do that with me. I've worked with Sean and Mary. Both are estate agents. Both go out there every day showing property, managing property, making offers, selling, buying for clients, all that kind of stuff. They want to do that for themselves, and so they joined. I had Graham and James, both based in the UK, both investors and developers of property in the UK. They came through the program, and it was great to have them on board. Daniel and Dermot, it sounds a bit like funny. Daniel and Dermot, it sounds like a radio show or something. Daniel and Dermot, both very professional, both very senior executives working for large corporates. Both of them wanted to get out of the corporate world where it's all go, full time, long hours, and they wanted to get into running their own property portfolio where the income that they earn from a salary, but that they need to put lots and lots of hours in, the income from that is capable from the income from the portfolio is capable of replacing that salary, and yet they have much, much more hours in the day. And Dermot is still working on building the portfolio, but Daniel has actually, now that he has built his portfolio sufficiently, that he actually jumped ship and he left his corporate job and is now full-time working for himself. And then finally, I'll talk about Aidan and Andrew, both from the trade background. Both have gone and built up a bit of a contracting business, and both of them of the view that they want to be building for themselves. They do not want to be building for clients any longer. And so both of them are out there actively buying sites, building, and both have come onto the program and stuff like that. So it shows you the range. Like it surprises me, the range of people that are interested in property. But then why would it surprise me? Because like building wealth ultimately is what it's all about. And property is a mainstay of building any kind of wealth. Now, it's always a good idea to have a property portfolio and an investment portfolio, maybe of stocks and shares and things like that, and various other ways. But property is a backbone to building wealth. So what have we covered today? I talked a little bit about myself and my background, my roller coaster ride, and I talked about why I think you should invest in property. Then I talked about how I would go about investing in building your portfolio. I talked a little bit about the Accelerator program, and I talked a little about the clients that I've helped. And so let's get into the next steps. Like, what next step should you take if you want to go and buy or build a property portfolio? Number one, research potential lenders in the market. Like, go out there and understand the mortgage approval process. If you haven't already done this, it can be time consuming. I had a guest on my podcast recently enough. We talked about this process, and it can take 6 months for you to prepare to go and draw down a mortgage, because the banks go back over 6 months of bank statements. And so you're going to make sure that those bank statements have, the information that the bank are looking for, and that there's no red flags in there. Number two, start gathering information and data on property values and rental rates in the area that you're looking to buy. And if you're not doing this, then how are you going to have the information to be able to see value when it comes along? If you're looking at a property and it's 300 grand and you're saying, oh, that looks like a bargain, based on what? Based on the fact that the one next door went from 250 grand, and so this is 50 grand more expensive, or based on the fact that there's one down the street that's for sale at the same time for 400 grand. So you need to find those examples that demonstrate the value in the area. And so if you're looking in a specific geographical area, start looking at the values per square foot or per square meter, and what are the rents per month that people are getting, whether it's the entire property or whether it's room by room. And if you're looking at room by room, is that for ensuite room by room, or is that for shared bathroom? All of these little things, they make a difference. The next thing you want to do, number three, and this is in the PDF, by the way, you want to start watching the market and looking out for those opportunities. Not just, reading looking at the portals, but actually reading the papers, looking at the news that's coming in. What are interest rates doing? The ECB recently lowered the rate again. And so rent rates are going to come down, mortgage rates are going to come down. That will allow you to establish whether or not it's a good time to fix your mortgage or to keep it floating. And little things like this, like, you'll find it very hard to make those decisions unless you're paying attention to the market. And another thing that I suggest is, and this is more for group 2 now, and we talked about the 2 groups, the novice ones. Those first 3 will work for everyone. But for group 4, or for group 2, I should say, question number 4 is, or step number 4 is to build a profile, your track record. Have you got all of photographs of all the projects you've done in the past? Have you got before and after photos? They can make for interesting content online. Or if you go and put something like a website together, that could be a way. But if you start building a profile and sharing that you have this track record, and then when you start meeting investors, what's the first thing they do after you've finished your coffee with them? They'll take out the phone and they'll do a quick Google on your name. And they'll be looking for, what have you done in the past? Where are you working? Does it all tally with what you've just told them, or does it not? And you need to be aware of what is said about you online so that you can actually make sure that the investor that you're speaking to knows that. And meet multiple investors. Build a relationship with all these guys. Post content. Start a social media thing. And even consider getting out of your comfort zone. Like, go and do some speaking. Go out there, make a video, make a podcast, something like that. Start attending property investor networking events. Now, this is something that is important in terms of building your network. Expand your circle of contacts. Meet with people on a regular basis. The reason that it's good is that you share information, but also you'll get all sorts of information from them, and motivation from them, and inspiration from them. Like, when I meet people in a networking event, and I say, so what are you doing? And they tell me about something. I'm like, oh wow, I had no idea that was something that is actually, that people are getting value from. And so you'll learn something new. And that's why attending these different networking events is always a good idea. Now, if you'd like to know more about my accelerator, where I have a network as well, and I can take you through the entire process of property investment, how to build that portfolio. I already mentioned the steps, but what you get with my accelerator is you get the education piece, you get the networking piece, but also you get the psychology piece and the accountability. And by accountability, I mean taking action. You're going to be held to account, making sure that over, say, a 3-month period that you're actually taking action. And as I said before, that is a key stage to it. I have a new intake starting very soon, and I'd like to know if you're interested. If it sounds like today's coaching, if any of this was of any use to you, and you think you'd like to actually look at joining my accelerator, this new intake, there's going to be an event very soon. You're going to be invited, if you're in the accelerator, you're going to be invited to that event. You're going to meet the other members, and we're going to go through a whole workshop. And so I would suggest you apply to see if you're a good fit for it. Click the link below, and you can soon enough become one of my mentees, and I'd be delighted to be your mentor. I hope this was helpful. Best of luck with everything. Best of luck with growing your wealth in your portfolio, and I'll speak to you again very soon.